Hi-ho, Silva. All right. Look, there was a pretty good breakthrough recently in the price action of silver, price action of gold. Keeps building up nicely. Everything's set up. We had a COT breakouts. We had RSI breakouts on daily chart. Just check out my previous couple of podcasts there for the precious metals market. And but right now, what I've been digging past, because when you're on the verge of something happening with the US dollar versus silver versus gold, since the US dollar is still pretty strong, the chart aren't looking as bullish as other currencies versus the precious metals market. Here's one of the posts I did for silver expressed in silver Australian dollars, guys. And this is a little detail that I've saw it back a while back, but I'm doing so much stuff, I kind of glimpsed over it. And there was actually a breakout that happened back in August of 2019. And the metals pulled back, silver pulled back across all currencies. Silver pulled back hard versus Australian dollar, and then there was a bounce up. And right now, we're try number 2 in progress. So weekly chart, we're going for another try right now. And I like going to my indicators, the True Strength Index, which I picked up from fully on Gold Tent. Always you see what other technical analysis guys are using, and then after that, you try to absorb it one element at a time, see if you can see something different that they don't see, or that just try a fresh new tangent with that indicator. And when I have a new indicator, I try not to look at the absolute numbers. I just try to take a step back and just see if I could spot some type of pattern, some type of behavior, which would give me clues on what's ongoing, what's the chart's telling me. Because the chart's telling me there's more than just price over time. It's telling you a story. And this is how I see it, like for these higher lows we had back in 2016 on the True Strength Indicator on the weekly. Every time it tried, overbought, going down and it flipped back up. That's a true signal of strength if it could do that above the zero line. Here it did it twice, combining that with a great takeoff pattern here. And after that, just went ballistic, just melted up. Same thing here happening today, above the zero line, higher lows, turning up, really showing true strength. So even if you're supposed to reset these indicators, they should maybe go to oversold or bounce off zero. The market's not letting it happen. They say, no way, we want to be in. That's the biggest pullback you could get. So this resilience, I believe, is reminiscent of 2010, 2011. Just the type of price action, the setup, the consolidation base. So I think right now this is possible that there's a melt up that's going to be in progress for silver expressed in Australian dollars. All right, now here's the monthly chart. Let me zoom out. Oh, bye. TSI monthly chart gave less false signals, clear patterns. You see when it went bearish, that was the bear market. Crossed up, wake up sign, but you're still barely above zero, not quite confirming the weight of evidence. But right now we're above zero. We crossed right here at the bottom, a lot of strength, and we're up, a lot of room before we get up to these levels that say, oh, okay, we're in a high stratosphere. It went up to these levels previously, so this could be probably a good target here. Here is, even we had a monthly defined breakout, guys, here, which failed. Look at that, closed above that neckline. But right now we're going to give another go at it, and we're going to see where that lands for the silver versus Australian dollars. Now, what about the yen? Silver expressed in yen, Japanese yen, same thing. Nice, look at this consolidation pattern here. Look at that wick all the way up, but end of the month closed below the previous close. We're starting to the chart's morphing, sideways move. Now we have that consolidation pattern, letting the 12-month moving average catch up. And right now, silver expressed in the Japanese yen is above its breakout line. So right after Australian dollar, the yen is going to make a go at its bigger breakout, which I consider the equivalent of gold at 1350, 1400 6-year base consolidation breakout. Right now, this consolidation pattern should bring us up here, and they're going to start falling one by one. We're going to have all the currencies. They're going to start doing this type of pattern eventually. Now we have gold expressed in Australian dollars. Same type of thing. This was really the chart that brought my attention to this. Look, this was way back. It had a breakout in late 2018. Like every US dollar versus gold broke out this summer. This is late 2018, already all-time high breakout, beautiful pattern. And this was just above 1800, sideways move up. Right now, sideways move, let the 12-month moving average catch up, just beautiful. Not overextending yourself, and when you are, you're pulling back nice and softly. And after that, right now, it's tempting a monthly defined breakout, so we have to wait for the end of the month. But when I'm not looking at these currencies there, which are like the Turkish lira or Zimbabwe, or all these that are already like at their end of life, which are they're going in hyperinflation. These are major currencies: the yen, the Australian dollars. So for me, this is comparable to what's going to happen to the Canadian dollars, the Great British Pound, and the US dollar. So gold and Australian dollars, another leading canary in this fiat currency debacle. Here's the other one, the yen. So the yen, it broke out of its 6-year base in mid 2019. In June, just like the US pairs or some of the other currencies. Not that leading, but it really started catching up. These are not all-time highs, because if I go back to 1980s, the yen was really getting hammered by gold. But for the recent picture, right now, consolidation pattern. So just like we had, and this actually broke out 1 month ahead. So this was, if you'd be looking at that, you knew that this month gold was going to break out versus the US dollar, or close to at least moving up. It had already broken out just 1 month, confirmed the monthly defined breakout right before, guys. So they're all falling one by one. And if you keep an eye on these currencies, how they're behaving going forward, the weakest ones, then they'll give you a clue or confidence that whatever currency you want to play gold with will eventually get its turn at the bat for another leg up. Okay, before I get to the analysis there for silver in the US dollar and gold in the US dollar, I look at the commitment of traders. They give good information, but the way I play or I see commitment of traders is not absolute values. It's just the behavior of the commitment of traders. Trying to see patterns and shifts in sentiment. You see here, it doesn't go before 1984. Right now, what you see here, this is something I look at, the non-reporting small speculators. Everybody looks at the commercials, large traders. I look at this, and for gold, it's very telling. It doesn't work for all type of futures, but for gold, when the net position is below the total shorts, so total shorts is red, total longs is green. When the total longs start increasing, the net position, you see, it goes above. So the yellow line goes above the total shorts, and that's what I've identified as a bull power zone for gold. Base never got lower, broke out above important resistance, and off it went. And you see how the total longs and keeping that net position above the total shorts. Oh, dip here, went below. That was a break in that bull era. But after that, when they came back in, sustained the price all the way up until finally, when it went back down, combining that with weight of evidence, with the monthly defined breakdowns, going below 12-month average, etc. You see the total, the net position for those non-reporting small speculators go back in bear territory, then you're out. It's a shift of sentiment. They're not in anymore. So this is a bull power zone. And right now we're having another transition period where, and I checked the numbers this week that just came out. It's continuing to spread. So the total longs is increasing. The total shorts have been decreasing for gold, creating net position to go higher and higher. So that yellow line is going to start staying in the upper stratosphere as the price action pushes up for the cut. Now I could also look at the cut for the commercials, the commercial players. I didn't put the large specs because it's just a mirror image of the commercial positionings. And people, oh, extreme positioning, it's going to go down, it's going to pull back. Well, it's all the behavior. And even you could look at some of North Star's post on the gold tent. They've seen these type of observations. Is in a bull mode, these numbers keep going up and up and up. Yes, there could be some pullbacks while these numbers reset, but you can't be scared saying, oh, it's the end of the bull run. Eventually, yes, there will be an extreme level in these numbers where the bull run ends, but these numbers adapt to the price action, and it's not the price action adapting to these numbers. So you can't use these absolute values to say, oh, it's high, it can't go higher, we have to pull back, or that bull market's done. Just use this to observe the behavior, and then you'll get a better clue of if you're in a bull era or if you're not, if you want additional weight of evidence other than just the price action breaking out above an inclining 12-month moving average or 200-day moving average. This just gives you additional information. Here, extreme COT data, somebody say, oh, this is gonna has to be a top when it's here until the COT index resets. Well, out of extreme conditions, the bull market was born. And if you're looking at the long term, you can't worry too much about the nominal information in the COT data, guys. All right, so here we are. This is another view to see, can I get my 1800 target for gold? Can I get my $27 target for silver in the next 3 months? So I'm trying to extrapolate where will my indicators be. Is it logical that I could reach 1800 in 3 months? If the indicators show that I'm going to be in the stratosphere of the chart, then I could say, what are the chances of me getting there? So this is something I call the moving average analysis. I look at previous peaks where the moving average was, where the price action was. And as you move along, it's like a lockstep. The price action resets, but sometimes the price action is a little higher. So sideways move lets the moving average catch up. 1578, that was a mistake. That's 1520 here, we had to close. So even if we're at pretty much the same distance or just a little bit above where we're at the previous high, the price action is actually higher. And now here I extrapolated at that angle of ascent in the March close will just be at the previous high. So where will the price action be if I'm about 16% away from the moving average? So if we close here in March, so 1775, that's where the monthly defined resistance is. We could overshoot a little bit, hit 1800. That's going to end up being a wick. Moving average is going to be right here. So we're going to be just a 16% distance away. I also extrapolated the current moving average, the direction where it is. We'll just be 16% away. So it's not out of the realm of possibility that before we revert back to the mean, before we let the moving average catch up, before we pull back, we'll be just in that zone right here. We're not going into 25% away from the moving average or 30%. This is just a reasonable, possible distance from the moving average. Yes, we'll be stretched out. Will it go up and go ballistic from there? Maybe, but it could have a good chance of pulling back. We're going to be hitting monthly defined resistance. So that's probably going to be a sweet spot to take money off the table, wait for a pullback, and enter when that moving average resets back here. These are great opportunities right here. When it turns around, great opportunity right here to enter. So that's probably how I would play it for gold. Wait to 1800, sell at that level, wait for a pullback, let the 12-month average catch up, and after that you could load back up if the weight of evidence is still in favor of that bull market, guys. All right, final chart. What about silver? I did the same thing. Silver's a little trickier, and remember, look, like I do my other analysis, is it possible we'll get a 2010 type move? And we saw with the TSI, with the Australian dollars, that we had a nice setup. For us to reach, and this is not for the faint of heart, there even sometimes I have difficulty believing that we could actually reach a $27 target by end of March. We need this type of move right here. It has to repeat here. So we're looking at we have to be distance about 28% away from the 12-month moving average. So that's going to bring us to this previous high, which we did in 2016. 28% is going to bring the moving average right here. So right now, the moving average is at a 44% incline. This has to accelerate to a 79% incline. And I didn't put it here, but that's pretty much what we had here, 77, 78% incline. So it's been done before. The setup's pretty much the same. Higher lows with the 12-month average above the zero line. That means we're increasing in price. Higher lows right here above the zero line. So I'm imagining right now, once silver starts getting a little bit of traction, and if it breaks out above here, we should really accelerate all the way to that 27. So that's like my best case scenario. I really want this to happen, but look, it's out of my control if it does or not. But if I look at the yen, if I look at the Australian dollars, for me, when I'm calculating probabilities of that possible move happening, they have to increase instead of decrease. If I see technicals breaking down, then I'll have to revise. But right now, everything's probable. Silver has been shown previously to go a little higher away from that moving average, and that's going to be a great opportunity to sell. You're going to be stretched above. You don't want to get caught on that pullback. You want to let the pullback happen. You want to let that moving average catch up, and then you get an opportunity to enter again. So that's still the setup right now. It's advancing as planned, but we'll have to readapt. That's why I keep looking at charts every day, looking for clues for either turnarounds or to throw this strategy out the door. But right now, this is still in the works, guys. So let me know what you think, and I'll keep you posted with charts as I dig them out, guys. Thanks for watching. Ciao.